we go. Right. How are we all doing? All good? This afternoon, let's just see who else comes in. This afternoon, we're going to just go through the FX pairs, have a look at what's going on everywhere, basically. We'll do some price action trading, hopefully on US indices. What's that? Oh, that's a screenshot. Get rid of that. Yeah, and just have a general overview of what's going on, basically. So I'm really unorganized. Let me just move this bar out of the way. So I've got other people's websites open. Get rid of all that, and that, and that, that. Okay, right. So I look after my brother-in-law's website. So I had his, I was just doing some work on his website for him. Right, so this afternoon, basically, there's no news at all. Oh, God, in all the wrong places. We've had all the news today, as we covered this morning, if you're in the live room this morning. So there's nothing really to trade this afternoon specifically. We've had quite a lot of movement, however, on stuff, mainly these metals taking off. So I'm going to go through the position trader account. I think this is probably going to be the last week of proper movement. We tend to get really quiet towards Christmas. So my plan always is to go flat over Christmas. It never happens. So I just try and scale out of stuff, because what tends to happen is you don't get any signals over the Christmas period. It all goes really flat and quiet. So the market just tends to go sideways for about 2 weeks, which means you don't get any new signals to get into anything. And it's also very hard to get out of what you're in. So things like this Dow might be all right, actually, because the indices do tend to still move. But like this US dollar CAD, for example, it's going to be quite difficult to get out of that because even though we've got a lot of news next week, which might actually work, but you don't tend to get a lot of movement on that news if there's no speculative traders in the banks. So a lot of that movement that we see is speculative movement, and they usually will try and go flat as early as they can. So I'm going to go through everything that I'm in and the plans I've got for everything. Basically, when we start getting close to Christmas with the position trading account, what I tend to do is anything that kind of gets close to 0.25%, like this pound US dollar, for example, I just start chucking it in the bank rather than trying to let things go to big targets so that I can do drawdown control, because you just don't get enough movement happening. So we'll go through that. And I've got the, I've been working on the dashboard, not the dashboard, this little risk reward tool a little bit more. So I was just going to go through a few enhancements on that. I still haven't managed to get it listed or get anything done with it. But anyway, so if there's any other things you want to discuss, let me know. We can look at anything specific or talk about anything specific. There's no questions, which is great. So there's no questions from the content. So if you're watching this on replay, obviously there's the ask a question button, but there isn't any questions at the moment. So if there's anything you want to discuss, obviously just chuck it out in the session. But I'm going to go through the position trader account first, so we can have a look at where everything is at the moment and everything that I'm in. So we'll start off at the top. Excuse me, US 30. So I did have the S&P as well. And I got out of the S&P on Wednesday, luckily, because it obviously came screaming, or went flying straight back up again. So basically, I got out of the S&P before non-farm payroll hit. Not non-farm payroll, sorry, FOMC, just to get flat, because I had the Dow and the S&P on, which was a little overexposed on stock indices. So I got out of the S&P and I've still got the Dow on. There's not much I can do with the Dow. These moves that we've had off of the back of FOMC, I don't think are to do with FOMC specifically. I think they're more just market movement and selling off basically before Christmas. So if you look at where we are, we've just put a new leg into the upside I think what we'll probably do over the next sort of few weeks is just kind of go sideways. So at the moment, I'm 150 ADR. There's 4 positions on that, or 4 trades on, which is absolutely fine. And looking for a pullback. My plan with the Dow, I don't really want to be short stock indices, but the EA that I'm using for this, at the moment, I haven't got a filter for long and short because it's just one EA running on one chart, so I can't filter those. So I'm going to put a filter in for that. But plan is for a pullback into these highs here. Zoom in a bit. So these highs basically are where I'm looking for price to come back to. Yeah, that's probably about the right zoom level. This weekly high that we got here, yeah, which we came up and tested and tested and tested, and then we've broken through yesterday. I'm looking for a retest of that, potentially for either going into a range or for a continuation up. But as you can see, we are very, very sideways. So it could well be that this is the high that we're putting in at the moment. But that's what I'm targeting. So I'm just going to put some targets in on that now. So I'm just going to put a TP down there on that one. This one here will stick up there as well. So what that's going to do is basically escape this one and close that one out. It will be roughly a break-even trade, but it's just to reduce the drawdown. So if we can get a 150 ADR move to the downside, that just gets me out of that for the moment. Aussie dollar, US dollar, nothing much we can do with these Aussies at the moment. They're flying, and obviously the US dollar's had bad news. I'm only in 2 on this. I'm pretty much at break even. Target at the moment on Aussie US is just down at these highs, monthly highs. So all I'm ever doing is targeting highs and lows. There's no real decent propulsion gaps. Not that you can see it on this chart, but there's no propulsion gaps really to speak of that are significant here. So we've got this area here, which is this accumulation we hit. We broke out, we retested, and then we've pushed up. So the likelihood is we will pull back into this area here, which is about 150 ADR. My original target was down at this low. So I'm just leaving the targets there at the moment. But if by, even if it happens this afternoon, if this afternoon we're down here, or we get down to here Monday, Tuesday next week, I will just shut it to get myself flat. Yeah, so just trying to scale out of as much as possible, basically, when we have the opportunity. CAD Swiss. That one is a buy, which is in profit at the moment. Target is just here. So we had this big propulsion move, which was there, basically. So I'm just targeting that, which is a 50% retracement, 125 ADR to the upside. So it's just literally targeting a 50% retracement on that leg. It could well go further, but again, I don't want to be too overloaded before Christmas. So we've got this accumulation here, this low here, this high there, or rather even that as well. But this big move here, here, and here, and here is one massive propulsion gap. So what I'm looking for is that out of that propulsion gap, but it may well go higher than that, but that's where I'm planning to get out. It's not a massive profit. It's going to be somewhere in the region of 0.4%, something, not massive. CAD yen. So CAD yen is pushing up again, should get the next entry on that one today. Where are we? So that'd be 40.63. Not quite, actually. So this is going to need to push up to ADR today for me to take another entry on that. So first entry, second entry, third entry is going to have to be somewhere up here if it gets there. If not, if it just rotates, it just rotates. So all these yen pairs, next week we've got news on the yen. Where am I? 14th to the 20th. There we go. So next week, next Friday, is the Bank of Japan rate potentially going to increase to 0.75. So if that happens, we should get some strength in that yen anyway, which will bring us back down into here or potentially down into these lows. But that move there, which broke that high. So there's 2 targets to the downside on this that I'm looking at. First one is this weekly high here and this monthly high. So that's my average, which is 1 ADR away between those 2 positions. Yeah, so if we can get back down and retest this area, I've got an escape route if I need it. So let's say next Thursday we are here. I will probably just take it off with whatever it is. It'll be no profit at all, really. But what I don't want is for it to do that and then hold it over Christmas. So the idea being is I'm just looking to escape these basically wherever I can just before Christmas. So if it comes down fast by Monday, Tuesday, then I might well let it run a little bit. That's where I potentially think we could go to. Certainly, I think we can get down to that weekly high, which is 170 ADR, 175 ADR. So that gives me a nice little profit there. But just worried about this monthly high, which we tested and then broke through. So we've kind of put in higher highs, higher lows rather on this one. There. So it is sort of potentially doing that, which is a bullish contraction. But we've got that interest rate coming. So we'll see what happens with that one, but holding that one short. I've only got 2 positions on it. The rest, most of these are singles. So Euro odd. That was the RSI extension back here. So that was the entry there. We did push up, didn't quite get to target. We pushed down into drawdown, didn't get far enough to get a second trade on. We've pushed back up again, not quite to target. So this one's just flip-flopping around at the moment. So I'm going to hold it, and the target is basically up here. So this area here. So we pushed down, support, support. We broke through it, resistance, resistance. So I'm expecting some resistance upside at 100 ADR. That's all I'm looking at the moment on that one. It is bearish though. So we'll see where we go. But that's Euro odd. Euro pound I've got short. Euro pounds I've got long. That's in profit at the moment. That's just about to hit target. Hardly any money, is it? But that's kind of where I'm looking at. Obviously at the minute, this is pretty bearish. So if we're going to continue down, we're extended on RSI. That is potentially where we're going to start to see the sellers come back in. We've got this propulsion gap here. So I'm trying to get, in fact, there's an argument for holding it a little bit longer, but that's an old weekly level, isn't it? Yeah, so that's an old weekly levels. Yeah, so my idea for TP here was that weekly. We hit it again. We hit it again. Again, it's a very strong area. It's been invalidated a couple of times. We've traded through it, and we screamed straight through it there. So it's kind of a weak resistance, but it is a weak resistance, and we're bearish. So if we're going to continue market structure to the downside, that's likely what we're going to get. So target is conservative on it. Again, it's only a single position, so it's not the end of the world. Euro yen also single on that. Second entry will be going in today if it pushes, which it is at the moment. 40.67. Yeah, so any minute now the second entry is going to go in on that one on the 5 minute time frame. So if we push up a little bit more, I'll be getting into second entry on that, which will bring the average up to somewhere around here. So target to the downside. I haven't really got one on this at the minute. Again, it's another yen. So I'm targeting at the moment here, but when the average goes up to there, there's an argument for moving the target to the monthly high, or more likely this weekly level here. So we've got 2 weekly levels there, here and here. So at the moment, that's a decent target to the downside. In fact, I might just move it there anyway. Just in case it does hammer down on that interest rate change, but I'd like it down there before that. But anyway, so shorts on that one at the moment. Euro New Zealand. time, 1/4. Just bear in mind the market's going to open soon. Got 2 long on that one at the minute. Target is up at the weekly high at the moment, so average is here. Again, if I can push up a little bit further, there's an argument for sort of looking at that area, but equally just pushing up at the minute. So not really got a solid target on that. I'm just going to see how it goes. This one has been totally sideways for a week. We pushed down for 2 days and we've been totally sideways for another week. So it's nothing much you can do with it. I think we're going to come and test that propulsion gap. So I'm being conservative and looking for a 200 ADR move to the upside, but I think it's probably got a lot further that one can go. But that's where I'm looking at the moment. Pound CAD, we've also got on long, target up at propulsion again. So that's the short entry. Oh, text, I don't want text. Go away. That's the short entry, which I got out of and immediately flipped long. So we went from RSI extension to RSI extension. So bought those lows back up and we've just consolidated for a week. So looking for a push back up into that propulsion gap. It's not gone anywhere. Nothing much you can do with these. And this is the danger over Christmas. What happens over Christmas, if you've got a lot of exposure on, is you just end up increasing this swap column, which isn't good. There's very few things you're going to get positive swaps on. US dollar CAD, I've got positive swaps on, but everything else is negative swaps. You can see I've been paying some pretty big amounts of swap. So it's the danger with this Christmas period. You have 2-3 weeks and literally just sit there hemorrhaging swaps, which is why it's good to get as flat as you can, really. Pound CAD and pound US dollar. I'm just going to close this pound US dollar and I'll explain why in a sec. So pound CAD, obviously, target to the upside there. Pound US dollar is the same trade, pretty much. So we've had a differential in news come in recently. We've had the pound, we had the Canadian news and US dollar. So the pound CAD and the pound US, pretty similar sort of exposure. Somebody at the door. So I just want to close that one out, stick that one in the bank, because there's a probability if this does take off in one direction or the other for any reason, one of them is going to go into much more profit and the other one's going to go into much more drawdown. So it doesn't seem sense to have them both on. So I'm just going to short. That's a nice easy short look from there all the way straight down into these lows. So we're coming down to test yesterday's low basically, but it's kind of likely that I think anyway that this US dollar is going to start to strengthen up a little bit over the next few weeks. We've had a lot of weakness in it, so I'm just a bit worried about having too much exposure on the dollar. I've got US dollar CAD on, I've now got gold on as well, and I've obviously got Aussie US, and this is going to interact as well. So it's quite a lot of US exposure on, so I'm just going to get out of that one there. Pound CAD I've still got. The CAD will move with the dollar as well, but it doesn't make much sense to have them both on. Pound Swiss, pound CAD. Okay, so that one obviously got longs on at the moment, looking to take second entry on that one. Quite 56. Still, it's got to go further before I get into another entry on that. US dollar CAD. So again, like I said, anything that gets to roughly 1/4%, when I'm eyeballing it, I don't set these as hard targets, but if I see something at roughly 1/4% and I've got an opportunity just to get it in the bank, get it in the bank. If you can get a couple of these every other day, it just builds your pot a little bit. And it just means you haven't got to hold it and babysit it over Christmas, really. So US dollar CAD is the other one. So this is the main issue at the moment. Say it's an issue. It's only 2% in drawdown. It's only 4 trades on it. So it's actually a normal position. So that one's gone in yesterday. We are testing yesterday's low at the moment. We are basically contracting down here. Target is propulsion for me at the moment. So this massive move that we've had on the dollar, this is why I think we've got an opportunity for this dollar to strengthen up a little bit. I think they're going to want to get out of some of this. So all of these dollars are doing pretty much the same thing. They've been collapsing. And the FOMC statement, although it wasn't particularly bullish, it wasn't actually bearish either. So I think we should start to move a little bit more normally on the dollar, but I just don't know. So I'm going to reduce risk on it all. So US dollar CAD, we've got this monthly low. So that's your 3-month low coming up at the minute. That's within ADR today. So if we can test that, that will be, it's not actually going to be the 5th position, is it? Because it's too close. I need 40, 52-ish. So we're going to have to move beyond that level for me to take another trade. So it's either going to bounce out of here and hopefully gradually move up, or we're going to go beyond that level, in which case then I'll buy a new one, which will bring me down to ADR, which gives me an opportunity to get out. So I think I said in this morning's live room, with this, anything that I can get up into profit close to average price, what I look to do is close out and then do drawdown control. Yeah. So it's just a case of trying to get exposure off. So be focusing on this column here. So anything here, let's say that, for example, turns into $30, $40 or 0.3, 0.4% or something, close it out, do a little bit of drawdown control. Yeah, and just rinse and repeat. So I'm just trying to keep the P&L basically as flat as I can on the run up. And gold. So gold, first trade taken today, short. So obviously we looked at this in the live room this morning. Gold has been hideously extended. We are still very, very extended. Gold and silver, massively bullish at the moment. 80-20 level normally works very, very well. I don't usually trade commodities, but this one does look like a very good short at the minute. So the reason I like it is because this all-time high we've got coming up within 200 ADR, I think it's worth a shot at a couple of trades on that extension just to try and see if this does find resistance here and goes into a range. So that's all I'm doing with that one. It's only a tiny little position on it to see if it works. And it is pushing again with 125 ADR. Silver doing the same thing. Now with gold, whenever I trade it, I get burnt. So I'm being a little cautious with this one. It's the sort of thing that I will just get out of, basically. So I don't mind pulling the plug on gold. I think there's a good chance it will pull back, but there's also a very good chance that we will do something like that as well. So if we get back down, it's one of those where I think I might just cut it. So with gold, as you can see, what tends to happen is we have these very big, strong moves, yeah, that suddenly come out of nowhere. If we get one of those, happy days. If we don't get one of those and we're doing this sort of thing and we're getting down to here, that's when I'll shut it. So it's one of those where I just kind of look at it and time it and eyeball it. I don't really want to be in it, to be honest. But the EA has taken it, so I'm going to hold it for a little bit, a couple of days, and see how we go into next week. It might be one that I regret. We've got you can see the high coming up here. This is that high, this blue line, 200 ADR. So scaling on this will be kind of 3 positions. By the time we hit that, I think we'll get a good, strong reaction off of that high. There'll be a lot of people looking to sell that high. So I think that's a good opportunity for a short because it's nicely extended already as well. So that's all I've got on at the moment. So the idea is to try and get as much of that off as possible. We've got no news today to move the market. Next week, we've got an absolute ton of it. So this is one of those situations where next week, I'll be watching every single news event for spikes. When those spikes come, I'll be looking to exit some of those positions. So it's a case of looking at, wrong terminal, looking at like the CAD on Monday when we've got the CAD news coming out. I'll be looking at the CAD Swiss and the CAD Yen. So I've got longs and shorts on that. It doesn't matter which way that CAD goes. If it goes somewhere, one of those is getting taken off and one of those is going into drawdown for second positions. Same with the pound CAD and the US CAD. So I've got quite a lot of exposure on the CAD. As you can see, the vast majority of it is short. So it's just a case of watching basically next week and trying to just chop bits and pieces away before Christmas. So I'm planning to stream next week on Monday. I'm going to monitor it next week, see how we get on Monday, Tuesday, Wednesday, see what the movement is like. If we start to go into that kind of sidewaysy movement, then wow, look at the DAX. Holy crap. DAX just taken off. Crikey. Wow, don't know why someone's just woken the DAX up. That's just the other indices aren't moving like that. So yeah, so I'll see how it goes next week. Typically, I take 2 weeks off before Christmas, so that will be next week. Then the week after is obviously Christmas, but I'll be on Monday, and then we'll see how we get on Tuesday, Wednesday. The trouble is, obviously, what we don't normally have 2 weeks before Christmas is this lot. So this year is a very different year in the fact that we've had this shutdown in the US. All of this news, we don't normally get this just before Christmas. So it's a bit of a funny one next week because we've got suddenly so many interest rates and all sorts of stuff coming out. I think the danger we have at the moment is we get slippage. With light liquidity, less traders in the market, you tend to get more slippage on price. If you get a big news event that comes out as not expected, you're going to get a large slippage. So from news trading opportunities for scalping, those big moves off of the actual news and those accumulations, they could well be very, very good opportunities next week for sort of scalp trades. Equally, you could find the market slipping 150% of ADR just because it needs to fill orders. So it's going to be an interesting week next week. Normally, I would say, let's see how it calms down. And that is still what I'd like to do. However, it's just one of those weeks at the minute, isn't it, with the news? So we have to just deal with what we got. So a little bit different this year. So just chipping away on everything there. We got 2 minutes to the open. US indices, we'll obviously see how we get on at the open today. Planning to trade the NASDAQ. Okay, so we'll trade the NASDAQ. We'll watch price action on the NASDAQ. And obviously just trade the ORBs. Has anybody got anything specifically they want to discuss or look at? If you have, let me know. We can look at anything particular. Quite a few people are interested in this Al Brooks indicator. I think somebody posted in the MST Academy members, didn't they? Yeah, about it. So I'll explain a little bit more about what this is. And
just bought the book of Al Brooks.
Sorry, carry on. Say again.
I just bought the book of Al Brooks, one of them, to try it out.
Right. Oh, okay. Which one?
I think they recommend first trends and then others.
Yeah. Okay.
So yeah, I'll try it out.
So
I also bought the book of Tom Hogarth.
Yeah.
And that's maybe we can put some time in the academies on the psychology side, because I think right now, for me to improve, that's I think the biggest part to work on. Yeah.
So the psychology part is something that I've always struggled with myself as well. So Tom's book around here somewhere is very good. So the two main books on psychology, Tom's is really good, but obviously Trading in the Zone by Mark Douglas is also kind of the classic, if you like. But both of those books talk about you as in respect to psychology. What Al Brooks's stuff is good at is giving you a logical approach to candlesticks, which in itself kind of fixes a lot of the psychological problems that people have. So the main issue with psychology that most traders struggle with is revenge trading. So you take a trade, it goes wrong, and you get angry. And what you tend to do is up your lot size and try and chase those losses and get yourself back to break even. If you're trading badly, it's not because you're trading badly usually, it's because the market conditions are wrong. So half of the psychological battle for me, and I think for most traders, has always been identifying when the market is wrong for your strategy. So if you're trading a breakout strategy and the market is just doing this all the time, you are going to fail all the time. It's recognizing that is what fixes people's psychology, not that the strategy doesn't work. And this is where the mismatch, I think, comes in. A lot of people don't have that ability to identify that the strategy is fine, the conditions are wrong. The only way you get that is by trading a strategy for a long time and figuring out why it works. Al Brooks's stuff teaches you very much the same as the way that I explain the market. You haven't got any hope of knowing which way the market is going to go. The market is random, it's price action, and the price action is driven by orders, and the orders are either bigger long or bigger short, and they change every minute. So you cannot control where this thing is going. So therefore, the psychological part has to be, I understand risk reward, and I understand that I'm doing everything right, i.e. I have a higher risk reward ratio, therefore it should make money when the market conditions are right, but identifying the market conditions are currently wrong. So with Al Brooks's stuff, he's got 3 books. One of them is about trend trading. One of them is about mean reversion. I think the other one is about range trading. I can't quite remember. But the trend trading book literally teaches you to identify that you need to wait for price to do a certain thing before you make a decision. So he gives you kind of very clear rules and setups. And this is where this indicator that I've got helps people in the numbering of the candlesticks. So the first thing he teaches you is you don't do anything for 3 candlesticks. So psychologically, you have nothing to do but watch the market, which immediately slows you down. So you're like, I've got to wait for 15 minutes before I can then make a decision. Now, after that 15 minutes, the price action probably won't have done enough to give you any clear indication as to where price is going. Therefore, you have to wait a little bit more. So it's just slowing yourself down and stopping yourself taking stupid trades. And that is partly through having a mechanical understanding of price action and what it does and what it doesn't do every day. So right now, just as an example, we've got the Globex high here and the Globex low here. There is a 90% probability that price is going to take out the Globex low or the Globex high. That is something that happens every day because the vast majority of days, 90% of them, we do not have inside bars, which means that we will move either up or move down. So there's a high probability that this is going to go long or short, but you can't make a decision at the moment on which way to go. Yeah. Tom Hugard has a strategy called, I don't know what it's called, but he basically says, if the first bar is bullish, go short. If the first bar is bearish, go long. What he's doing basically is flipping a coin. Yeah, because he understands that he hasn't got a clue which way price is going. But if they've gone short, they might well go long. And if they've gone long, they might well go short. The probabilities of that happening are quite a little bit higher than 50-50. So it's just creating an edge through understanding of probabilities. If you understand the maths and the probabilities of trading, which is what all these people that make money out of trading know, it doesn't matter which way you go. So right now we've got a candle there. You can go long or you can go short on it. Now it's a green candle, so Tom would be saying to short it. But wait for someone to, look, they're not shorting it at the moment. Wait for them to start shorting it before you start shorting it, that sort of thing. It's just about putting that control, I think, in in place. One of the other rules about Al Brooks's stuff is the 18 candle rule. So after 18 candles, which is 1.5 hours, yeah, there is a 80 to 90% probability that we have put in either the high of the day or the low of the day. So a lot of traders that trade his methods, which he teaches in his books, won't do anything until the 18th candle. And if the 18th candle is near the high, they can take a short with a stop above that high, knowing that there is a high probability if that trade works out, they've got a very tiny loss and a massive win. Or you could take a long if we're close to the high of the day at candle 18 and assume that because we've moved up and we are at the high of the day or close to the high of day, we will continue to do that and the low of the day has been put in. But what it does is it gives you a mechanism of counting the candlesticks, which means you don't do anything else. And I think that's what traders that struggle with psychological, they need some kind of fixed pattern. For me, it's the opening range breakout. So I don't do anything for the first 5 minutes. I wait and see what happens. If there's a big enough move, then I'll take it long. Yeah. If that continues and works, brilliant. And I know it's only going to work 33% of the time. So when I get stopped out, I'm not shocked because I've tested it and I know what happens. I know it only works 33, 40% of the time, usually about 40. But when it works twice as much as it doesn't. Yeah.
With regards to that, the ORB, because I've been running it mostly on automatic mode and it's not good at the moment or last 2 months. But also from a statistical point of view, if we almost like have a risk reward of 2 to 1 with the EA, then 1 in 3 is we're going to be break even.
Yeah.
So shouldn't it be a bit more?
It depends if you're going to add. So if let me just move this down. So let's just take a buy here. Yeah, just that standard. So that's a 2 to 1 risk reward ratio. So if I just buy that now, yeah, if I get a 33% strike rate, you're quite right, I will break even on this. Yep. So the way to make money is understanding that price moves in waves. Yeah. And if price is going to go to where we think it's going to go, right? So the probabilities here are 90% chance we're going to break that Globex high. So if we're going to break that Globex high and it does this and then pulls back, I can add more size because the market is confirming what I thought. And then I can add more to my trade so that when we get there, I've added a second position on, which doesn't give me a 2 to 1 risk reward ratio. It now gives me a 3 or a 4 to 1 risk reward ratio. So the part of the key to this type of trading, scalping, is understanding that you're not going to make it work if you just add a single trade, if you're not going to use discretion. So and you think Tom Hugard does exactly the same, doesn't he? He's constantly adding into his winning trades because he's waiting for price to confirm what he thinks is going to happen. So if he thinks it's going up to here, then if it starts to go up to there, he'll add more size. But what he'll also do is reduce his risk. So I've got a risk on this at the moment of roughly $10. So what I can do is I can add a new order above that high, yeah, with a smaller stop loss on it, and TP in the same place, yeah. So if we add that order, let's just see if that triggers. If this pulls back now and then takes that order, that is not a 2 to 1 anymore. It's more like a 4 to 1. It's actually going to be about a 3.5 to 1, something like that. But that's basically how you make money. So you'll see a lot of people that trade Al Brooks stuff. He's got a very strict set of setups that work and a strict set of things that the market does every day. It can only do that, be an outside bar. It can do an inside bar, or it can be a bear bar or a bull bar. Yeah, so a lower low, lower high, or a higher low, higher high. That's all the market can do. So all you're going to do every day is you're going to decide if you're a bull or a bear. So if you're a bull, you're going to go for that, and you're going to add into that trade as it goes on its way there. And if it gets there, it's going to be something like a 12 or a 6 or a 7 to 1. Not just take one trade, place a stop, place a TP, and wait. That does work if the mechanical edge works long term, but it won't work all the time. And this is the difference. And like, there's people in the group at the moment who are looking for the holy grail of trading, which is something that works every single day, every single week, every single month. I've never found it. Not mechanically, because the only way mechanical trading works with single entries is if you have something that you can let play out over 8 to 12 months, because the market conditions change. So a breakout strategy doesn't work when the market goes sideways. If the market goes sideways, this will hemorrhage cash. If the market goes sideways for 2 months, it will hemorrhage cash for 2 months. But what it will also do is it will take off into a trend for 3-4 months of the year and make back 3 times what it did while it sat sideways. But you can't pay the mortgage with that. And this is the problem with mechanical strategies. So you've got to have some kind of mechanism to add value to the trades that work. So this is pushing back down to the downside now. Let's get rid of that order. So we'll wait for this candle to go in. We're trading way too early, obviously, on this, but you got a nice big bearish candle in there. So is this bullish or is this bearish? No idea. But it's going to go to here. It's actually already done it, isn't it? It's put the Globex low in, or it's going to go to there with an 80% probability. But the problem is at the moment, you can't make a decision on that. There's not enough room to get a trade in, is there? Yeah. So you should be waiting, sitting and waiting. And again, it's like the psychological part of things, waiting for trades. My H1M5 mean reversion with position trading uses the hourly time frame. Sometimes it sits there for a week and doesn't take an entry. That's impossible for a lot of people psychologically to do, because they don't understand that the edges, the strategies, backtesting the fact that it works long term, they have to be in a trade. So people will be sitting there right now, itchy fingers, ready to go on the 15-minute candle, but not realizing that there's actually no room. If you go short now, you've got that much room. There's no short trade on right now, unless your short idea is that we're going to test that previous low, in which case then you should be using something like the Globex high to give yourself a 2-to-1 risk reward ratio. When this moves down, yeah, and you're right, wait for it to pull back and add some more size. Because if you're going to be right, you want more size on when you're right than when you're wrong, scaling into the trades. And that's what most of the successful traders who trade 5-minute timeframes are doing. They're not just getting in once. They're getting in 2-3 times. And when they're right, they're getting 9-10 Rs, which completely makes the mechanical edge work, but not with a single trade. It's got to be discretionary. And this is the hard part about trading. And this is why this time frame is so difficult for most traders, is because you can't trade it mechanically because it's random chop. You've got to be discretionary about it. And you've got to make different decisions based on how your day is going. So if you've had one stop out today, you're going to have a different approach to the market than if you'd taken that one trade and it just gone straight to target. If you took that one trade and went straight to target, you probably stopped trading for the day. If you've had a stop out, you've got a different decision-making process to make now. I've now got to recoup losses as well as, yeah. So again, this is where
I
your
think
discretion.
probably there is, I think, I'm just reading the book, so is where he said, yeah, every trade is a new one. Huh? You should not bring in the old one because you start behaving wrong.
Exactly, yeah, and that's where your just your psychological ability to not revenge trade comes in. So yeah. It's about one of the things Tom Hugard talks about is flipping the switch in his book. And that's exactly what I've just done now. I went long a second ago. Now I'm short. Yeah. Why am I short? The market's gone short. So I'm short. Yeah. We're below the moving average. Yeah. We're bearish. Market's put in a bearish reversal. So I'm short. And it's that ability to do that and not get cross with the market, go with the market. Now, if the market does this today, yeah, and then that, and then that, and then that for the next hour, nothing I can do about it. And that's where good traders are separated from bad traders. Bad traders will suddenly go, screw it.
Yeah.
I'm going to get my money back. That will also lose because the market conditions are not right. So you stop. You got to stop. And this is, I think, what you'll find if you do Al Brooks's stuff. There's no trade at the moment here, okay? So I'm taking a trade just to hopefully demonstrate if we get some movement, how we're going in, which is why I'm taking tiny lots, which is that's going to put that back down to 10. So with this now, the market basically, there's no decision to make. This is in a range, okay? So there's no definition of any kind of trend whatsoever here. What we've done is we've opened down, we've pushed up, now we've pushed back down again. So we've gone up and down. Yeah, that's the definition of a trading range. A lot of people will be buying the Globex low. So one of two things is going to happen. The Globex low is going to break. If the Globex low breaks, where are we headed? To test the next level. Where's the next level? Previous low. So if I am right on this first trade, what I will be doing is going fantastic. And I will wait for a pullback. If the market pulls back and I get a confirmation of more sellers entering the market, I will add more size, which will bring my average closer. And what I'll need to do is reduce my risk more on that first trade and the second trade that I take. But what I'm doing is, if I'm right and we're going here, my initial risk reward on the trade there is 2.57 to 1. So it's pretty good. So if now what happens is we pull back after moving down and I add a second trade on like that, the second trade is going to give me something like a 1 to 2. So now I've got a 1 to 4.5 on the same trade I had to 1 to 2 to start on. I've now got a 1 to 4.5 risk reward ratio. I'm doing nothing but go with what price is doing for me, which is confirming I'm right. But this is how you overcome your losses. A 1 to 2 risk reward ratio, being right 33% of the time, doesn't make you money. A 1 to 4.5, being right 33% of the time, makes you a fortune. Look at the difference. Look. So let's say I get 1 to 2.5, yeah, with a 33% strike rate. So I'm wrong most of the time. Still making money, yeah, but by adding more size, yeah, and keeping my risk the same. So that second entry, I start moving those stops down. So if it's wrong, I don't lose any more money. I lose the same amount of money every time. But look at the difference in the P&L. It's 10 times larger.
I think this is what Tom is saying. It's good for the psychology to switch it around. Because most people are, once they're in profit, they're anxious, they're afraid to lose it. And once they're in drawdown, they're hopeful to recoup it. And I think the whole thing is to change that into the other way around. If it's going your way, increase.
Yeah.
If it's not going to your way, cut it.
Yeah, exactly. So if you, and again, this is those books that you're going to read. That what this indicator that I've built is basically, it's very similar to my support resistance propulsion indicator, but it works off of sessions. So the main differences are, with the US market specifically, we're looking at the Globex high, which is the pre-market high. This is where the market's algorithms were not able to go beyond, which means that there are large orders at this price point, which stopped the market today. The Globex low is the same point to the downside. These are areas where, when we test them again, if there's low volume in the market, they will react at. But what the market will do 90% of the time, 90% of days, is it will test these two. Yeah. So if they're really, it's really bad today because they're really tight. But if they were further away, you'll have more room to move to make money out of. And it's all about giving yourself the room. So the previous close from yesterday and yesterday's high are targets. Remember that inside bars happen 8% of the time at the moment on this instrument, which means that if I have a candle like that yesterday, the probabilities of not testing that or that, yeah, so it's 8%. So to get an inside bar is only going to happen 8% of the time, which means that 92% probability, if we open up here, we are going there or there. All you've got to do is make a mathematical formula and pick one. You've got a 50-50 chance of it being right. Yeah. 92% of the time, it's going to go there or there. That's a given. So today we're either going here or here. And this is what I'm targeting. Where am I going now? Previous low. Why? Because this is where they bought it yesterday. Why did they buy it yesterday? Well, because they couldn't get through it. So this is where all the buyers turned the market around. So if the buyers yesterday are still in the same place, we're not going to get through that. But we are going to find out whether we can or not. And if the market can't do that, it's going to find out if it can get through this one. It will do that 92% of the time. So you just got to create an equation which gives you a big reward at one of those levels. But you need to wait for the market to confirm it. So at the minute, we are not going anywhere. We've had 2 bull candles. We've had 2 bear candles. What we've actually done is we've moved below the Globex low, but that's all we've done. The bulls are now fighting back, which means the bears can't take control. So they're still in a trading range because we're not going anywhere, right? So these trades that I'm taking now, I'm taking them to try and demonstrate what happens when you scale into these P&L levels. But it's not the right time to trade. There's no signals to go in yet. Nobody's said long or short yet. The bulls have said we're going long. The bears have said we're going short. The bulls are now saying we're going long again. What are we? Nothing. We wait for someone to take control of the market. So either the bears close below that Globex low and go, you know what, you guys that sold earlier, we're with you. And then we'll target that low. If they pull back now, it means that the buyers, the bulls, are not letting that Globex low go. That is the lowest point they wanted for the day. You've tried to get lower and we said we're not going lower. So where are we going? Higher. So what are we going to do? Test the Globex high. So your job is now to formulate a trade plan that gives you a positive risk reward to get there. That is smaller than that. So you could literally, if this closes bull in the next 1 minute, you could say, right, I'm going to be a bull today. That's my plan. And that is where I'm going. Now, if this moves up like this, hits that propulsion gap and pulls back, and then you get a bull candle, you add more size. That little tiny trade there, which doesn't seem significant, is adding 1R. So the 2R becomes a 3R. All of a sudden, a 3R at 33% strike rate is massively profitable. But it's because I know where the price is going. And that's what it's all about, trading these small time frames. And position trading as well. That's what that's all about. It's why I keep saying, I'm going to scale in. When it goes, it's going to go to there. And if it doesn't go to there, it's going to go to there. And it's about planning and knowing where the market's going to go, because you've got no way of identifying which way it's going. It's going to go where the hell it wants. You're not in control of that. So all you've got to do is put a mathematical equation on distance that makes money. That's it. As long as you understand that, you don't need the psychology, because you know that that's going to work or that's going to work. And you can prove this to yourself by going back through time and looking at previous days when the market opened. And you can see when the market opens, it went straight down and tested what? The Globex low. And then it bounced off. So when the market opened here and broke short, you went short with it at some point, yeah, and said, okay, well, if we're going short, we're going down there. If we're not going short, where are we going? Back up to yesterday's close. So I try a short out and it works. If I try the short out and the short doesn't work, as long as I've got enough room there to get there and make profit, that's what I'll do. It could go up to there.
You do this in the back tester.
You don't need to do it in the back tester. You can't do this in the back tester because to do that, you've got to create an algorithm. This is discretionary.
No, I mean manually, just to train yourself.
You could, yeah.
Because then it's instead of waiting each day, you can just practice.
That's a good point. I don't actually know if this works. I'm going to try this in the back tester. I haven't even tested this in the back tester. This would be interesting to see if this actually works in the back tester. I don't think it will because I haven't coded the buttons. Take orders. Price action toolkit.
Precision trader, maybe.
Yeah, probably. Yeah, they don't work. I might be able to code that to work.
That would be nice because then you can first practice.
Yeah. You can use the price action toolkit EA. You could use the position trader EA. But just reading this price action here, let me just get rid of that on the screen. So what's happened here, sellers have taken control of the market for 10 minutes. The buyers have pushed back. And what we've got is an outside bar, which means that the bulls have tried to regain control of the market. And the bears have also tried to continue that move. Neither of them succeeded. Now, it's more bullish on that last 5 minutes than it is bearish. But we need to wait for this candle now to close to find out whether or not we are going to make that last bull move stick or whether the bears are going to move. I've got plenty of room here, for this trade to do this for half an hour without having to worry about it. Because I know for a fact we're going here, or if we've broken the Globex low, which is the plan, we're going down to yesterday's low. So if this is wrong, all I'm going to do is I'm going to get out there with a loss because the market is doing this. I am trying to get into, in this case, I'm trying to get into a breakout short. If I'm a trend trader, I would be selling that right now, selling that high, because I am assuming that we've got a high, a low, and we're going to put in a lower high. So if my plan is that we are bearish, and this is the part of it, that psychological decision, that ability to switch and pick a bull or a bear, you've got to pick a side. It's going up or going down. You need to pick a side. Your profitability today is not whether or not you get the decision right. It's whether or not you are on the right team. One of them's going to win. You don't know which one yet. So if you're a bear, you'll sell that high. Why? Because all that's happening is we're taking profit on the first leg. We're going to put a second one in now. If you're a bull, what you're doing is you're sitting now waiting, going, right, well, we've just made some progress. I will wait and see if we make more progress. And you will buy that. And your plan will be to get to yesterday's high. Yeah, because what's going to happen today with 80 to 90% probability is we are going to get to yesterday's high, or we're going to get to yesterday's low. Because there's only a 8% chance we won't do one of those things. So we know we're going here. We know we're going there with a 92% probability on this instrument. So pick a side. But don't get cross if you pick the wrong side first of all. Flip to the right side and let that one play out. And that will probably hit. But make sure that when you get that trade as a winner, you've got more size on than the one you lost on. If you look at, I don't know whether or not you follow Tom Hugard's stuff, but he looks like he knows what he's doing. What he's actually doing, if you look at the trades he takes, is he's using martingale. Yeah. And there's absolutely nothing wrong with using martingale in the right way. So what you'll find Tom will do, you can go and look at some of his trades on a daily basis if you follow what he does. But what he'll do is he'll go, I'm short in the market because we had a bull candle, so I'm going short. That will then either work and he'll take 20 pips out of the market and he'll go, fantastic, I'm done for the day. Or that will fail and he'll go, I've stopped out. I'm flipping long. And that will then either work and he'll take more pips than he lost out the market and go, I'm done for the day. Or that will fail. Then he'll go another direction once he's waited for price action to confirm who the hell is in charge at the moment. And then he'll get into a trade. And what he'll then do is go and add. I'm adding another one. And then it will move that far and he'll go, I'm out. I'm done for the day. The reason he's out and done for the day after the same amount of movement on all three of those trades is because the third one he took had 3 times the lot size on. So what's he just done? Got rid of loss number 1, got rid of loss number 2, and made profit on the third of those longs. It's martingale. Yeah. And this is what a lot of traders that are successful will also do. Yeah. So here, for example, I've got 10 on short. If the first trade doesn't work out, I'll go 20 short. If the next one doesn't work out, I can go 30 short. The better thing to do is go 10 every time. And when a trade's working out, sell it again. Yeah. So this is now starting to work out. If we're right, that is what I should be looking for now. So my target there is $23 for $9. If I now execute that order, not quite right yet, but if this moves down further, I'll execute that second order. And all I'm going to do is I'm going to move this stop loss down to here. And you'll see that my risk will be pretty much the same, but I'll have 2 trades on, which means that reward will be pretty much double. It's martingale. But it's martingale by adding 1, and then when you're right, add another 1. And then if you're right again, add another 1. Yeah, but not going 10, 20, 40, 80, dead. Yeah, and this is what good trading is all about. It's identifying, yes, you're on the right team. So let's execute the second trade, and let's move this stop loss now down to here. What does that give me as a risk? $14.30. Yeah, so I had $9 risk on. Now I've got $14 risk on, but look at my profit. It's $54. What's the risk reward on that? 4, 5? It's not even that, is it?
Better, yeah.
Yeah, but it's better.
Well, it's more than 2.
Yeah, it's more than 2. Now, what's going to happen now is the bears are either now going to confirm I'm right by moving down, yeah, and then these moving averages are going to start to come down. Now, if we're right, what happens? On a trend, on its way to a previous high, we pull back into the moving average. We do a 50% retracement. We might do a 61 retracement. We might do a 38 retracement. But what we will do is we will retrace. So if we put a lower low in now, the bears are in control at the moment. So where are the bears heading? There. Possibly here. So cautious target would be there. Overall target would be there. Why? Because there's a 92% chance we're not going to put an inside bar on yesterday. That is yesterday's high. That is yesterday's low. So that 8% chance means we're going to do this all day. There's a much higher chance we're either going to do that and go below that, or we're going to come down here and it's not going to work out, and then we're going to fly above that level. If that's what they do, I'm going to take a loss of $14 and I'm going to become a bear, a bull. But when I'm a bull, I will probably try and get 3 trades on the way to that, so that I can hopefully get out of the day beaten up with a break even. And that's what it's all about, is using your discretion to decide on direction. That is very, very, very difficult to program into an EA. And this is what everybody's looking for. Some of the guys in the Discord channel, when it doesn't go wrong, they blame the market. They look for filters. They blame this, they blame that. What you should be doing is learning to read price action so that you know who's in charge. Because if they're in charge, you want to be on their side. Yeah. And then you stay on their side until they prove you otherwise. But if someone's taken, I don't know what the ORB was. So if someone's taken an ORB long today and it stopped out and they flipped short and then it comes back up and stops them out, it's the strategy's problem. It's not the strategy's problem. The strategy has an edge over years. It's long term, it makes profit. But what it doesn't do is work in a range. What did we start off with today? A range. So we lost money. We add. So we flip a direction, we change direction. And this is the psychological part, is understanding. I think this is where people's problem with psychology is. They haven't got the time or the, not so much brain power, but the willingness to understand that this is literally just maths. There is no way of predicting price movement, and everybody spends their life looking for something to predict the future. And this is what Al Brooks's books will teach you, Tom's books, Mark Douglas's books. they very much teach you if you go close to a dog, you're likely to get bitten. The people that don't make it are the ones that keep going up to the dogs. Yeah. If you repeat the same thing over and over again that doesn't work, it won't work. Yeah. It's a 50-50 shot. It's going up or going down. Your job is literally just to apply maths to that movement. Yeah.
I think the biggest problem, like the 78% is losing, they have more winners, but their losers are so much bigger that at the end they lose money.
Yeah.
And I think by turning that around.
And it's because you're not controlling this. So if you separate this risk out into the two different trades, so this EA that I've built automatically amalgamates stop losses. So when I move it, it spreads them back out again. When you put it close together, it merges them. So you can see what it basically does. But the original stop loss was there. So my original stop was 20 for a 54 reward, which is 2.5, 3 to 1 ish. But that is a much bigger risk reward ratio. But if I'm right, and we are doing what I think we're doing, we shouldn't go above there. If we go above there, it means we're in a trading range. Yeah, so if we're in a trading range, I don't want to be in it. But what I've got to do next time is have this in mind, yeah? And not chase the loss, but have it in mind that the next trade I take, number 3, I'm going to need to scale in quite aggressively to that one if I'm going to get myself back to a break-even point today. So I think the key with good traders and bad traders is the good traders understand that getting into a fight and coming out with a break even is a result. The bad traders are the ones that take 2 break evens and get cross on day 3, because that cross day is the one that usually is the losing day, and that's the one you lose all your money on and it all goes wrong. And again, I'm always an advocate for spending time in the simulator. If you watch price action fly past very quickly, it will get burnt into your retinas, and you'll understand it only does something over and over again, the same thing. It goes up and it goes down and it tests levels it's been to before. So if you're in the middle of 2 levels, you know it's going up or down to test one of those levels. It makes it so much easier for you to jump on board that train. I would have no problem adding to this, not here, but if we pull back here, anywhere back here, and I see a bear candle come in, I've got no problem adding and moving this down and moving this down. Because if we're right, that is what is going to happen. It's going to go down to here. Now, if it doesn't give me an opportunity to add more size and it just goes straight down to here in the next 20 minutes, what it does, it doesn't let me get a big one. It lets me have an average one. I can't control it. And this is the thing.
It would be really nice to train the brain power, because I think, or the brain muscle, to indeed be able to do this in the backtester.
So if you've got the Zone Trader EA, you can use the Zone Trader. Yeah, I mean, Zone Trader. Have there.
I've got it. Yeah.
This is good for helping you to understand where price is going. And if you can understand where price is going, that helps you on an intraday basis just see where those, so see where the levels are, if you like. So we know that, yeah, I mean, it would be good. I'll see if I can get this new EA working in the back test, because it would be really good to have it as a testing tool.
That would be good. Yeah, I've done the Zone Trader for quite a few months live.
Yeah. So we know it's going up to there, and when it comes out of there, it's going down to here. And it's just about knowing that's all it does. And if you spend a weekend it's boring as hell, but just put in boxes where you think price is going, and it doesn't matter about the money, forget money. What you're looking to try and do is train your brain as to where price is going to go. There's areas where price is tested. Yeah. And it's going to go to those levels and test them, because that's all it does. Price is a bank's way of identifying how much money they can make. all they do is it's like a bully in a playground pushing. All they're doing is going, right, we made a fortune down here. Let's see if we can get them again. Let's see if we can push them a bit further. Yeah. And they'll get pushed and they'll get pushed back. And they'll go, okay, we can't push back any further. Remember that kid up there? Let's go and push that kid up there. Let's see if we can push him. Oh, we couldn't. Okay. And that's all they're doing. They're looking for places where they can test to see if they can make money. And if they can get beyond there, they will make money. And then they'll take profit on that. And then they'll go, right, let's see if we can make more money down there. We can't. Okay, so let's go and make money up there. All they're doing is with these moves, and this is why they call it price discovery. You get balance, where we're all happy and playing in the playground, and then we get some idiot come and try it on. Yeah, until he finds someone bigger, an iceberg, which he hits and bounces off of. We keep doing that. And that's all that price is ever going to do. And it will never do anything different. If you look and test, which you have done in here, you will find that's all it ever does. It's going down there or it's going up there. 100% guaranteed that's going to happen. So on an intraday basis, your decision-making process is very simple. Am I with those bullies or am I with those bullies? And you just make sure you stay with those bullies until those bullies get there or they don't. And if they don't get there, you get on board with the other bullies. Where you die is where it goes like that. And those days, you just can't make a lot of money. But if you can make enough to get yourself to break even on the days where it doesn't do much, what you do is you come out with a black eye, but you're alive. And then you get the money when that happens. That's it. That's all it is, trading. Mm-hmm. Applying maths to that sort of methodology, if you like. Hard, you know, it's not certainly not easy, is it? But, you know, identifying things like this, like the propulsion move. So my average price is bang in the middle of these sellers. So hopefully these sellers, when we get back here, if we get back here, these sellers will add. So I know I am really safe in this trade. So when we get back to here, if we get back to here, I will be looking for them to fill that with sell orders. So when they tell me they've done that by putting a bear candle in within there, I will add more size. And that next trade that I take won't make a massive amount of money, but what it will do is will amplify my gains without increasing my risk. So the next sell order, let's say price has moved up and it's pushing down. Let's say the next candle comes in there. We should be very safe behind that propulsion gap. So what that is going to do is it's going to add 15 onto that, but it's not going to increase this because I'm going to move these down. So it might increase it to 20, but I'm now up to 60. So I've got a 3-to-1 risk reward ratio. Now, what you can also do, and again, this is discretionary, and you're not going to do this every day, is you're going to look at the price action and go, okay, if this works and that is what happens, when we get down to there, what I might decide to do is actually go, let's try and do that. Before you know it, you've got a 5 or a 6R, because if price is going to not be 10%, what's it going to do? It's going to go beyond that, not hit that, because if it hits that, it's creating an inside bar. What it needs to do is go and test beyond that. So you can easily get an extension down there. So you could put your TPs actually below that level. But this is where everyone will start to buy, because this is what they call a value area low. It's an area that we haven't been to before, which means that there's a likelihood we are going to pull back. Because if we are going to put in market structure, we are going to do that. So people will start to buy down here and target where the sellers came from. And then the sellers will go down to here and the buyers will get in here and they will target where the sellers came from. The buyers will enter more, and that's what a trend is. So if you wanted to be an aggressive target today, what you would actually do is go somewhere like this. And all of a sudden now, I'll put the TPs together, you're making 73 instead of 60 or 54, wasn't it? So I'm making an extra $20. It's almost twice as much money, isn't it? But it's all about visualization. Yeah, you don't know where price is going, but you know what price is going to do. It's not going there or there today because we're breaking down at the moment. So it's definitely going here. But probably it's going further because it's going to put in a lower high, which means it probably want a lower low if it's going to be a bear candle on the daily chart. We're just visualizing daily candlesticks intraday. That's what intraday trading is all about. But that's all the books. And this is the thing, books are great and they will teach you all of this. Having a lot of knowledge doesn't make you a good trader. It makes you very knowledgeable. I'm very knowledgeable because I've read all the books and done all the courses. But actually putting it into practice is where the psychology comes in. And that's the hard part, which everybody struggles with. But when you've done it a number of times, you know how to control the risk and what the rewards are going to be. The problem, I think, psychologically is people do not hold for the targets. So what will happen today is we will get a bull candle, followed by a bull candle, followed by a bear candle, followed by a bull candle, and people will go, screw that, I'm going to take this. I'll take my 1-to-1 risk reward ratio. Or the sin of all sins, I'll move my stop loss to break even. So what does price do? Come back to your entry price. Why? Because that's a 50% retracement. And then what does it do? Puts in today's lower low. That makes you cross. So you start revenge trading because you were 100% right, but you didn't have the bottle to hold the trade. And that's, this is where the psychology comes in. You got to set it, forget it, and let it do its thing. You're either right or you're wrong. If you're wrong and it's going to be an inside bar, you're wrong and it's an inside bar. You take the hit and you move on. But tomorrow, you'll get back today's money because it won't do an inside bar twice in a row. A 2IB, a 2 inside bar setup, is very, very, very rare. Where you get an inside bar and then a second inside bar. And again, he'll teach you in the books about 2IB setups. Very, very rare. Yeah. What normally follows a 2IB setup is an outside bar, because what we've got is contraction, confusion. So the bulls try and then they usually fail. And then the bears try and they usually fail. The next day becomes a bullish or a bearish candle. So when you get a 2IB followed by an outside bar, you've got a very, very, very good trading opportunity because you've got a big amount of room for the next day's high or the next day's low. Those are the ones you'll get those beautiful trends on. But these are the ones where you get the 10Rs. You've got to go through this and survive this to get to this. Reading the books will make you understand that. But whether or not you can execute it and identify what is potentially coming next is the difficult part.
No, but there I think I read more psychology books now than technical books because I think there's the edge.
Yeah, controlling your controlling emotion and patience as well. The problem with 5-minute timeframes is it makes you impatient because you expect, because you're trading low timeframes, to get paid immediately. This might not do anything for 25 candles. You've got to sit there for 25 candles babysitting this, which is why it drives me a little bit nuts on 5-minute timeframes. I used to do it with the stocks when I was trading stocks all the time. You've not only got the complexity of having to choose the stocks, you've then got to hope those stocks do what you want them to do on the day. So there's always I've picked the wrong stock. That one flew. I was watching it and I didn't trade it. There's that which acts on your psychology. And then there's the one that you're in where it takes forever to do what you want. So you close the trade out and then it does it. These are exactly the same. Everything that moves on a 5-minute time frame is going to play with your brain. This is what the prop firms know, that you are going to screw up, not because there's anything wrong with your understanding of the market or how you see price moving. It's you're just not going to be able to sit there and be patient. Again, you just got to be patient. you sit here for 20 minutes, 30 minutes. You've seen me do it in the live rooms. Sit there and waffle on because there's nothing to do. 90% of trading is sitting there doing nothing. Waiting. But
well, that's the nice thing about position trading. Yeah, I look at it twice a day and that's it. Yeah. Mostly there's nothing right now, nothing's happened.
No, you sit, and this is the thing that drives people mad about position trading. We sit here for a week and every now and again, you sit here for a week, you don't bank anything. Something's just hit target. Euro pound just hit target. You sit here for a week and you do nothing. And then everything moves, but it's because of news. So this moves because of fundamentals. So if there's no fundamentals, there's no reason to move. They will stay in balance on a pair of symbols because there is no reason for them to be out of balance. It's only when there is a fundamental shift that you will find 6 out of the 10 banks will go, I think we need to be long euro. The 4 that are not part of that 6 will start to go into drawdown. Yeah. Eventually they will stop selling to the 6 and then the 6 will take the profit. But there needs to be some imbalance in the market for it to move, because if you've got balance, it will flatline. So it's the more sellers than buyers, and that is where you have $7 trillion a day going through this thing. There is no one on the planet that can tell you which way anything is going any day of the week. Nobody. Commodities, to a certain extent, if you understand them fully, you can pick direction easier because it's supply and demand driven. If you know OPEC are going to be putting restrictions on oil production and you hear that a load of Chinese manufacturers are going to ramp up industrial production and build 50 new factories, they're going to need oil. So that's where your analysts in the banks and institutions who are paid 6 figures a year will go, we need to be buying oil. But that'll be a long play. And it might not happen for weeks and weeks and weeks. We sit here and we just wait for them to do it. Our job as position traders is not to guess the direction and not to time when to get in. It's to just ride. And that's it. We ride. With this, on low time frames, you're riding a smaller wave within hours, but the price action is exactly the same. If the bears are in control, the bulls will try to either fight back or the bears will make a move and they will take part of it off. Then they will add more and they will take part of it off. And that creates market structure. It happens on 1 minute, 5 minute, 15, 30, hourly, daily, every time frame. So it doesn't matter what you look at. The principles are exactly the same. It's harder on higher time frames because if you're trading up here, up on the hourly time frames, you know that we're going to do the same thing on weekly. So if I flick over now here, no, actually I can't do it on the indicator. If you go and do an analysis of inside bars on a weekly time frame, yeah, you'll find very much the same statistic. That's one. Inside bar. That's an inside bar. Got an inside bar there. That might be, but see, although that is technically an inside bar, what did it do that week? Yeah, it tested the low. Yeah, we broke through the high. It's a bit different on weekly because you get the odd gaps and things, but the market does the same thing. All we're doing is on a 5 minute chart, we're trading the daily candlestick from yesterday and saying where we're going today. On a daily chart, an hourly chart or a 4 hourly chart, you're looking at the weekly levels and you're seeing where are we going this week. The highest probability is that we will either go to last week's high or last week's low at some point this week. And the high probability is that we will break out of one of those levels. Now, whether we can close above it or not, We don't know. But if we open here, yeah, and the market starts to move down, you target last week's low. If the market starts to move up, you target last week's high. There's a high probability you're going to be right on one of those. What your job is to do is, when you're right, is to have more size on than when you're wrong, adding into winners. So when it starts to go like this and you have shorted it and it goes like that and stops you out, you can flip long, knowing full well that if we've tested last week's low, there's a probability that we're going to go and test last week's high. If I've got more room there and I can add in twice on the way, happy days. A lot more complicated to do it than it is on a daily time frame, because it all happens so unbelievably slow. You're much better off, I think, with this type of stuff doing low time frame stuff like this. So we're nearly there, right? So one or two things is going to happen in a minute. Yeah, when we get here. See, it hasn't given me an opportunity to scale in anymore on this. I could have taken that there. I don't like taking 1 bar pullbacks, but you could have shorted that again there. So this is now either going to, down at this previous low, bounce off of it, in which case we probably want to take our money here, or we're going to put in a lower low on yesterday. It's going to do one of those two things. We're either going to be an inside bar or we're not. I don't know. So what a lot of people will do is they will see a hammer go in, they will see a big bull candle go in, and they will close their trade here, taking a 1.6. Pen's not working again. Don't know why it does this. It's some kind of time thing where I get to a certain point and it goes, I don't want to draw anymore. It's just not drawing. They'll take a 1.6R or something. Literally not drawing. I didn't draw that. Or that. Or that. What's going on? Look at that. It's drawing. I'm not even touching it. Anyway, so they'll take it like a 1.6R. So you get a 1.6 out of it. What was your, what is the whole theory? We're putting in a lower low. Why take a 1.6 just because the market's doing what you said it would do? Pull back on its way to going to your target. So leave it in place. And this is where everybody gets wrong. Oh, I've lost 3 times today. I've got to take a break even. No, you haven't. You've got to let the trade go where you think it's going. You're right. Look at it. You're right. Keep it. Hold it. That's the psychological part that I don't think you've got a book that can teach you. You've got to do it. Hold it. When you hold it and you know it's working, brilliant. Now, we've hit this low. There is a probability of this bouncing. So now we've hit the low, I might say, actually, I'll get out. So I lost 10. Did I just lose 1 trade? I think I did, didn't I? I mean, I shouldn't have taken it anyway. But yeah, so there was 1 loser, wasn't there? And I've now made, well, I haven't yet. But I'm going to make a 7R on this, basically, roughly. And obviously, break even. It's not costing me a penny now. In fact, what you should do is not break even on this now. What you should do is lock in $10. So now I've lost 1 trade at $10. I've locked in $10. The very worst thing that could happen today, is I either break even or I make 7R. But I'm not making 7R because I'm lucky or I've timed it right. I know where price is going with a 90% probability. It's maths, it's edge, it's knowing where things are headed. How they get there is the thing that drives you nuts. So if it gets there by doing this, yeah, I'm going to stop out. I'm going to lose. I can't control how price gets somewhere. If it goes nice and parabolic like this, it's brilliant. If it goes nice and trendy like it did yesterday, yeah, so if it goes nice and trendy like this, fine. If it goes parabolic like this, fine. If it goes, I mean, this was nice and trendy, yeah, but if it goes like this, Yeah, which we get these whippy days where it's just up and down, but eventually it gets somewhere. You won't make money because you just can't predict it. These are the days that tip you over the edge and make you double your lot size every time. And if you do that, you'll just get killed. As long as you're controlling the risk, you're controlling you've heard it many times, I'm sure. Cut your losses, let your winners run. Yeah, there's nothing to say you can't cut your losses and then move your losses into profit and still let your winners run. Add to your winners because they're running. You know, it's all about just doing that. So we're at these lows now. So we're now in an area of price discovery. Anybody that thinks today is going to be a trading range day and we are going to close back inside yesterday's range will be buying it. Okay, so they are now buying it with the assumption that they can make that as a worst case scenario if we are going to put in a bear day. So the buyers will be now buying this outside of these lows, assuming that, like me, quite rightly, as a bear, I'm going to be scared and get out of my trade because I've made my money for the day. So I'm done. Quite rightly. So what I've done now is I've fueled the buyers move back up into there, but it got to where I said it was going to go to. So what we've just done today is we've put in a lower low. Now, where we close is irrelevant. If this closes here today, what we've done is we've got a bear day. Let's look at it on the daily chart. So we wait for this to pull back a little bit. But what we've got today now is a bear day. But that's yesterday's low there. So if this closes here today, yeah, we have got a lower low and a lower high in. So there's your lower low and your lower high. Bear candle. Absolutely fine. It's not an inside bar. The probabilities of an inside bar are much lower. So we've done it. That's today done. Now you walk away and you go and do something else. What you don't do is go, I'm on a fire today. I think I'm going to get in with the buyers. Because what will happen is we'll come down and we'll test this propulsion gap and we'll do 200% ADR today. And what you'll do is you'll give back half of your winnings, if not more. Again, psychologically, especially in Mark Douglas's book, knowing a good thing when you see it, yeah, taking the good thing, paying yourself and keeping your pay. Yeah, you don't go and get paid from a 9-to-5 job and immediately walk out the next day and spunk the whole lot. Yeah, you get paid from a 9-to-5 job and you take that money and you spend that money. You don't suddenly get rid of it immediately, get greedy. Some people do. They take it and they go and sit in a bookmakers all day long and bet on horses. And then they run out of money. But that's done. That's the day done. It worked today. If it hadn't worked today, what I would be is in a fight, battling and struggling. But the goal would be to come out with a small loss or to come out with a profit. One thing you can do psychologically is set yourself a target for the day for losses. So one of my old mentors, Kunal Desai, he had a rule where basically, I think it was 3. So if you've taken 3 trades and those 3 trades are losers, you are done for the day. Because of one of 2 things. Either the market conditions are wrong for the strategy that you're trying to implement, or the market conditions are right for the strategy and you are not in the zone and reading the price action correctly. Either way, the chances are when you have got 3 losing trades in a row, what is more likely to happen is you're going to turn that into 6 losing trades in a row. Yeah, it's a lot harder tomorrow to get back a 7-to-1 risk-reward ratio than it is to get back a 4-to-1 risk-reward ratio. So come back tomorrow when either you're in the zone or the market conditions are correct and recoup that loss. Don't try and chase it today because it's wrong. Yeah. If the buyers stepped in here and bought it, the same buyers stepped in there and bought it, if they have just bought this and this now goes down, they should stop. But what you will find is they will buy the next bull candle and then they will buy the next bull candle. And on a day like yesterday where the DAX went 200% ADR, they will keep doing that until they're 12R down on their account. It's very hard to get a 13-to-1 risk reward ratio back. Yeah, it's very easy to get a 4-to-1. So there's so much to psychology, but it changes dependent on what is happening today, this week, this month. You'll hear me say that a lot about position trading. This is why I can't give you a rule about when should I do drawdown control, when should I take profit, because it depends on how your week, your month, and your day is going as to when you should make decisions. Because your goal is to make money, it's not to follow a set of rules. The rules will make you money, but at the end of the day, if someone's sitting there going, do you want 500 quid? You take 500 quid. That's what you need to do. So that's all part of it as well. You know, if you've had 3 losing days on the trot, Kunal used to say, stop for the week, come back on Monday, because you've done something really wrong. The best investment in your time you can make right now is to not spend any capital and look at why that went wrong. If you followed your rules and everything worked, then absolutely fine. Just assume the market's wrong this week. It's all gone wrong for some reason. Don't try and understand why. Come back fresh next week after 48 hours off and you'll have forgotten that loss. And you start anew, like Al Brooks said, every single trade you take is a new trade. Bulls coming in, look. So if you're a bull now, you're buying. So right now, that is really all I would want to potentially look for. Something like that, which is a 1 to 1.5 R. So nothing wrong with that. What we're going to do now is we're going to pull back on this leg. Okay, so let's assume that the bears are still in control. We're going to pull back to the moving average, or we're going to pull back to an area where the bears were selling and they're going to sell some more. So if you're a bull now, you need to understand that you are on the wrong side of today's move, and therefore you shouldn't be targeting the previous high, you shouldn't be targeting the Globex high. The best you can hope for is that we get back to the open, which means that today's candlestick is going to look like that. It's going to be a hammer. So if that's what your theory is now, we're going to put a hammer in today because we're bullish. Take that trade. But do not expect to get here or here. Make sure that the risk-reward ratio fits with where you think price is going to go. If that is not giving you a minimum of a 2R, this is a 1.5, probably not good. Does that mean you shouldn't take it? No, because you could get in here right now, and when it moves up like that and pulls back, you could buy it again and add a second position, move your stops up to make sure that the risk is the same, and now you've created a 4R because you've got twice as much lot size on you. You've created a 3R. Yeah, but on low time frames like this, you've got to be able to, if you see an opportunity that looks good like this one does, you've got to be able to look at that and go, is it worth it? I've just made 5R or something going down. Is it worth me taking a risk here to lose one of those R's for 1.5 of them? If I'm having a bad day, probably. If I'm having a good day, it's done. Walk away. And again, talking about Tom Hugard, he will be, some of his streams, I don't watch his streams because I'm on, but when I used to watch them, you know, a lot of his stuff is like, he's in, he's done, he goes, brilliant, 20 minutes in, I'm done for the day. And that's it, he's done, because he is done. A lot of the times he'll be streaming for 2 hours because the market is just going up and down and up and down and fighting. You have to fight. But that part of it, you've got to know whether or not you're in the fight or whether or not you've won the fight. And this is where people go wrong, isn't it? You suddenly win the fight and then you stop. That's brilliant. If you don't stop, that's where you're going wrong because you've just made money. So stop. Now, let's see if we can go and do something else and go and open the back tester, go and do some development or just do something else, basically. Stop. It's done. Hopefully that's... gives you an idea about the psychological side. I don't.
Hopefully you can make it work in the backtest, and maybe you can give us some homework. Eh? Let's go for the NAS 2024 and see what you can get out of it with the
Yeah,
backtester.
yeah. I mean, you've got to have a theory. You've got to have a rule set to execute trades. There was one guy that I can't remember his name. He trades in Al Brooks's rooms. I did Al Brooks's price action course. I don't know. I've got notes on it, so I can probably tell when it was. It was good 6 years ago, 7 years ago, maybe. But there was a guy that used to trade in his rooms, and he came up with a rule set of, it wasn't a rule set. It was an analysis he did. So what he did was he looked at this is where I came up with partly with some of the logic for the opening range breakout that I trade. But he did an analysis where you have the high and the low of the day. If you open within a set percentage of that high and low, so if the market when it opens is somewhere around about here or here or here, he did an analysis which said that when you hit that level or you hit that level, I think it was something like 68% of the time, don't quote me on the figures, but it was a very high percentage strike rate wise. Okay. Just trying to draw an 8, but it's not letting me. Something like, say it was 68%. When you hit that, what will happen is it will be on candle number X to Y. Okay, so let's say candle 11 to 16, for example. And this is partly where Al's 18 candle rule comes in. So if you miss the move and you can't get into it, you should be saying to yourself, I'm not going to touch this market until candle 11 is painted, because there's a 68% probability that between candle 11 and 16 is when we're going to reach a bounce point today. And that will either be the bounce point that moves the market the opposite direction, like the DAX today, or it'll be the bounce point that starts the pullback for whoever is in control today. Either way, if I miss this move, my rule today is I do not trade until candle 12. Candle 12 is 1 hour. Candle 18 is 1.5 hours into a session which usually lasts somewhere between 6 to 7 hours. So what you're doing is you're saying, I'm going to let 20% of the day go, and then I'm going to make a decision. So you've got to, if you're going to do this in the back tester, you've got to have a mechanical set of rules that will trigger your entry. So you could say, I'm going to wait for 15 minutes to go in, and I'm not going to trade anything until I've seen that 15 minutes of range. If that 15 minutes of range today looks like that, if I could draw the third candle, yeah, I'm going to be a bear. But what I'm not going to do is sell it. What I'm going to do is I'm going to wait for a bull candle to come in, and then I'm going to wait to take a short below that bull candle. And if that bull candle becomes another bull candle, I'm going to take a short below that bull candle. And I'm going to assume that these guys are going to win today, and that is where we're going. If that doesn't trigger and they suddenly take a high there, you have now got to say, my set of rules says that we are now looking more bullish than bearish. Therefore, I am not going to take a trade of that high. I'm going to wait for them to pull back, and I'm going to wait for another bull candle to go in, and then I'm going to get in with those bulls. So you've got to have, if you're going to do this in the back tester, you've got to have a logical set of rules that triggers your first, I'm a bull or a bear. Yeah. And it could be that you wait for the first 15-minute candle to be bearish, and if it's bearish, you buy it, like one of Tom's strategies. That's absolutely fine and valid, because although the bears have gone there, what's probably happening is it's going to drop and then it's going to pop. But it might just drop and drop and drop.
But maybe we can make a rule set together.
I don't know. I don't really have a rule set. I have a feeling. And the feeling is from watching this happen all the time. I had a feeling this was going to be bearish today. I can't explain to you why it was bearish today, but it felt bearish. It felt heavy. And it's something to do with that, I think. But I can't say that. But you can't say it's to do with that, because this price action here in Globex today, if this price action was like that on another day, I might feel bullish. Either way, if you're going to trade, you need to have if we are above yesterday's low, I'm going to be bearish. If we're above the open from yesterday, I'm going to be bullish. If we're above the close from yesterday, I'm going to be bearish. But I'm going to wait and see what the price does. A lot of people will use moving averages. So this guy that I built this indicator for, he wanted that bearish moving average. So his rule is, we are in a potential range with a bearish moving average, which makes me slightly bearish. If we are bearish with a bearish moving average, I am doing nothing but hit the sell button. You will not make me hit the bull button, the buy button, regardless. And if I do not get a sell opportunity, I stay out the market. That's his rules. Whether they are Al Brooks's rules or not, I don't know, because I haven't watched this stuff for a long time, and I haven't been in his rooms. Things change, don't they? So that might be Al Brooks's actual rule set. I don't know. But market structure is what I follow: higher highs and higher lows. So if I see that, where we've basically tried to go up, we've been beaten down, when we go up again, I'm going to assume that it's a pullback short. If I'm wrong and that happens, I'm going to assume it's bullish and I'll wait for a pullback long. Either way, I'm usually a pullback trader. So I'm waiting for a better price than I think we're going to get. But I will always have a target. And again, this is another thing that you need to take into account. Let's say that price action that I just drew there had happened today, and that happens. My opportunity on this pullback is tiny, because that is the previous day's high. That is the Globex high today. So I haven't got much room here. And the market will also see that and go, we haven't got much room. If it goes up, I will probably wait to see what that reaction is before I decide to go long, because the probability is it's going to bounce. Whereas if that price action had happened down here and we had all of that room, I would have a different stance on it. And you see, this is where your discretion comes in, and reading this comes in. I think if you'll find, I know Al Brooks has got a trading room as well. If you go into his trading room, and I know there's a girl called Rose that trades in there. Al trades in there, obviously. I don't know who else he has, but if you watch them, they will follow the rule set, but they will also have a different take on it, because it's all discretion at the end of the day, how you read price action. A bull candle's a bull candle, a bear candle's a bear candle, an inside bar is an indecision, an outside bar is an indecision. How you read that indecision as to where you think it's going today is discretionary, isn't it? So you have to come up with your own set of rules that works for you. If you see something working more often than not, that's your rule set. Some people like to be bounce play traders, like here. They will love to do this. Some people like to be pullback trend traders. Yeah, and they will both work, but which one you prefer will be the one that you can make work more often. Like you say, if you go and do this in the back tester, you'll find that you'll suddenly go, I just read this, I get this. I don't get this bounce play thing. It just doesn't seem to click. If it doesn't click, don't do it. Do what works, because that's at the end of the day what you need to do. Is you need to have something that works more often than it doesn't. And if it doesn't work, it needs to be something that allows you to scale in to make it more profitable when it does work. So if you only get a 40% strike rate, but you find it really easy to add into those ones that win, that's your strategy. But I can only give you an analysis on what potentially could happen on each candlestick. Whether or not it happens and how you scale into it is very difficult.
It's 50-50.
It's always 50-50. Every candlestick is 50-50. All it's doing is telling you what's happened over the last 5 minutes. It's got nothing to do with the next 5 minutes at all. But in context, that 5 minutes there is a 50% pullback on a bear move. So although that is a bull move, And a novice trader would see that as a bullish, like a novice trader will see that as a bullish engulfing. Purely, let me just zoom into it. And this is great because this is all explained in the books. A novice trader will see that as a bullish engulfing, and they will be taught to buy this candlestick. A more advanced trader will see that as an outside bar, indicating that there was bearish interest and bullish interest, and it ended more bullish. An advanced trader will say, we have just taken profit on the first leg of our move down today. So when you are a bullish novice and you buy that and it works, well done. If you're an advanced trader and you sell that and it works, well done. But understanding that it doesn't matter whether you're advanced or a novice, the odds were exactly the same. It could have gone to previous high, but it decided to go to previous low. And adjusting, that is where you make money. By just understanding, and this is what the opening range breakout does. We basically look for ranges at the open that have decent volume that can be traded. And if it breaks long, we go with the people that are buying it. If they prove to be incorrect, we go with the other people, because the probability is we're going to go to one of those levels. Unfortunately, at the open, you get periods like we've got at the moment where the open doesn't open. Yeah. And that's nothing we can do about that. So the ORB's Achilles heel is tight, quiet opening ranges. You will also find that if you're trying to manually read price action, it will drive you nuts because it'll be up, down, up, down, up, down, up, down. Yeah. But after the up, down, up, you stop. That's what you've got to do, and accept that. So, and the OLB does that. It tries a long, it tries a short, it goes, oh, it didn't work. It doesn't go, I'll keep going long and short, because you could do that for an hour and a half. But if you've got a rule that goes, I'm going to try twice, and if it doesn't work out, I'm going to wait for candle 18, which is coming up in a minute. You'll see this candle in 2 minutes. Candle 18 will be drawn in red. The probabilities are that when you get to candle 18, you have seen the high or the low of the day. So when this next candle comes in with a probability of 90%, that is today's high, or, and this will be in the books, that is today's low. It's not going to go beyond that level, and it's not going to go beyond that level with 90% probability. And it's correct. Now, your job is now to say, okay, am I a bear or am I a bull? So after 2 stop outs, you could say, I'm going to wait to candle 18. And after candle 18, if we are below the moving averages, I'm going to look for short entries, but I'm going to look for scalps for 1R to try and recoup my losses. Yeah, discretion. So it's not just about what am I going to do with price action. It's what am I going to do with price action at that point based on what's already happened today. That part you cannot very easily backtest. You've got to know what happened yesterday, what happened this morning, because my goal is never making $5,000 a day. It's making enough money to be profitable and get that equity curve like that. And I have down days where I just can't do it. But what I do have is up days where when the days work out like today, you just walk away and you've paid for those down days. You've paid for those break evens. But it's consistently doing that every day. And that's the psychological part of it. And you can't know that until you've done it. And this is where backtesting works. If you do that every day and you continuously do it in a backtester, you can test weeks at a time, can't you? Suddenly you're making money for weeks at a time and you don't even realize it. And you look at your P&L and at the end of the day and go, this is really easy. Why is it that it's not easy when I do it in the real world? Because it's all moving so slowly. So your problem is 90% of the time boredom. I'm bored. I need to take a trade. No, just wait for these candles. And this is Al's thing, Al's edge, is these candle numbers, I think. It's like that guy said, 68% probability that if you wait to these candles, you are going to find the bounce. If the bounce happens before candle 11, don't take it. It's probably going to be bearish. If the bounce happens after an hour and a bit, try it. There's a 68% probability. But what is there also? 32% probability you're going to lose. So then you've got to be able to have that mentality to flip. A lot of people will buy this in a minute. Yeah. That 18 is the low of the day with a decent probability. But if it's not, that proves to you that that is the high of the day. So what are we going to do? Wait for a pullback into here and try and short it, because the probability, if this bounces at this low, is that we will do this for the rest of the day or for a few hours. So I can quite comfortably sell a 50% retracement and get out back down here again, where the people will be buying it to buy up to the 50% retracement, who then will sell it to down to the low of the day. And if we're going to form a range, because we've already made today's movement, and this is the low of the day that's gone in, we are not going to go above that level. We are not going to go below that level. So we might go into a range. So it's just understanding what price does. Al's got in his course, he's got a flip book or a folder which has got I don't know, I remember it as being thousands, but it's probably not. It's probably hundreds of screenshots of price action which he's marked up and drawn on, which is every single type of day and every single movement within a day you could possibly ever imagine. And they're all etched in his brain. And somehow he knows when price has done something, you'll go, right, this is probably going to be this type of day, because he's just seen it all happen over and over again. And when you've been doing it for a long time, you will also be like that. But you won't have charts and things because you don't teach. You'll just know that most of the time when we get this, it either does that or it doesn't. So if you think it's going to do that, you're going to buy it right now with a tiny little stop. And if you're right, you're easily going to get a 3R out of it or a 4R. But you're going to get out here because you've seen millions of times price pull back into moving averages and drop down again. But the only reason you know this is because you've seen it. If you get hold of Al's scrapbook and you just go through his scrapbook all over Christmas for 3 weeks, every morning you wake up and you spend an hour and a half looking through every single one of those charts. The next time price does something, you'll go, that is a pullback with a do, whatever it is he calls it. And you'll just go, well, the way to trade this is this. And it's just burnt into retinas. I was told to spend 10,000 hours in front of charts before I would be mentored by a guy. And I told him it was impossible. And he basically said to me, no, it's not. You get in the strategy tester, you sit down and you trade an entire year's worth of price action. When you've done that, come back. And I did. And every time he said something, what's likely to happen here, I would say it was either going to do this or this. And he goes, how do you know that? I said, because I spent 10,000 hours in front of a chart. Because I've seen everything.
Right. I will do that, but I'm going to go now.
Yeah, cool.
Great session. Thanks.
No problem. I'll see you on Monday. And yeah, let me just answer. So I've got a couple of other questions in there. I just suddenly realised Sebastian's been talking and he's gone. No, he's still here. Bully on a playground. I think that's the best description I've ever heard of how banks work. It is true. It is how banks work. There you go. So there's our down day. Look. So that candle 18, 1.5 hours in, we've blown through my targets wherever I put them, haven't we? I got out with profit, but I could have had the lot. You know, it did what I thought it was going to do, but still took the money. Great session today. I will rewatch a few times. Would appreciate when we make some more sessions to determine direction, price action. Yeah, we can do this every day. Every session, if you want to. I don't know what people want to learn. You know, this is the thing. Everything I've put in the academy is everything I know to a certain degree. But putting it into action is, you know, part of the job, isn't it? So I
think now it's time to practice, like you said.
Exactly. It's just practice. So I'll work on this maybe over the weekend and see if I can get this working in the tester. I should be able to. I might need to. I don't know. I'll have a play with it. Yeah, we can certainly do that. I'll make sure I label this one up as price action, and I'll put it in the reading price action part of the course, because it's obviously 90% of this day has been about reading price action. So it'll be in there, and you can obviously go back and watch it again. But don't forget as well, this is a kind of perfect day. Yeah, this is quite difficult.
If you look at the NASDAQ today, there was 2 stop outs.
Yeah, so opening range breakout.
Not the NASDAQ, the DAX. I'm sorry, the DAX.
The DAX. Yeah. So this is a perfect day for this type of movement. You'll also get days where it doesn't work like this, and you're going to get chopped around. So if we can trade different scenarios of it. I'm in the DAX this morning. So that was your open. There's a buy there, tiny buy. But this is the thing. So you can go, obviously, if you want to, and you can watch the rest of this in the replay. But this is the open of the DAX today. We opened above yesterday's high. So there was no real room to the upside today that we could say we're going here. So buying today was actually risky because we'd done 200% of the average daily range and we opened above the yesterday's high. So where are you going? There's just nowhere really to target. So today's move would have been better to wait for a bearish move, because the likelihood is we're going to come back down to an area. Come on, pen. Just need to move this out of the way, the risk reward thing, but I can't disable my pen. There we go. So the chances are we're going to pull back down into an area we've been to before. So today on the DAX, up at these highs, we had yesterday's close drawn in, which would have been around here somewhere. I've got the wrong. Let's load it up properly. This is all hindsight, obviously. So, but just to demonstrate the point. So that is the DAX setup. So that is the open here of the DAX. This is yesterday's close on the DAX, the proper close at 4:30. Yeah. And that was a propulsion gap to the downside. And that is yesterday's low. So the chance to get into previous day's low today, not going to happen. So if we are going long today, where can we test to the downside? We can test yesterday's high and we can test the close of yesterday. So if I was a seller today, if I'm a buyer today, I'm thinking I've got nowhere to go. If I'm a seller and we've pushed up, I've got a definite place that I can go to. Previous and previous. So I'm better off trying to sell today because I know where we're likely to go. Yeah. But I haven't got any upside targets. So going long worked, but it's one of those where you'd go, I don't like it. And I'd be feeling heavy up here and thinking I don't like it. And then I'd be wanting to get out at a break even. And then I would be confirmed that I knew I didn't like it. I definitely like this. And I've got somewhere to go. So previous closes, this indicator draws previous closes in because price tests previous closes all the time. When we're opening, we are going to see if we could trade where we closed yesterday. There will be orders here that have opened up here that are underwater. They will want to get those orders filled. So they will try to go for the previous close. There will be highs and lows where there will be bounce points and liquidity they will want to test. So these lines on the chart are the only options you have. So if you open up here and there's no lines above, be a bear. That can be one of your rules. It's a very simple rule. And today it was the right rule. It may not have been the right rule, but what you would have done today is you would literally have waited for some bearish price action to come in. So you'd have gone here. That looks like we're going to turn around. But what I'm going to do is I'm going to wait until I'm confirmed that we're going to turn around. So you may have shorted that candle there after a pullback. You may have been, I'm going to just sell it here. But if you're right, where does your stop go? There. Because if you're right, where are we going? Down. We're not going up anymore. So you know you're safe with a stop loss there. Is there enough room down to here for a risk reward trade? Yes. So it pulls back, and when it comes down and it closes here, you add more. So now what have you got? Probably a 1, 2, 3R turned into something like a 5 to 6R. Yep. But this would have scared the crap out of you. But what would it have done? Come back to break even. What have you done if you've moved to break even with a stop loss, like everybody does? You've just taken a break even for your correct assumption for the day. Break even stops, you will get a break even. That's why they're called break even stops, because the idea of them is they break even. So if you want to break even, put a break even stop in, but that's all you're going to get 90% of the time. Don't use them. These buttons are useless. I never use them. I will use them if I'm down here somewhere, because yes, there could be a spike, but other than that, you don't use them. Your stop's always going to be below wherever the structure is, or above wherever the structure is. But that was today's DAX. Short. Hindsight analysis, obviously, but that candlestick there should tell you something. We've pushed up, we couldn't get any higher. We put in an inside bar, we put in an outside bar. We pushed up, we couldn't get any higher. We put in an outside bar, we put in an inside bar. What is all of those candlesticks telling you? The bulls are not in control of this market. Inside bars and outside bars are indecision. Nobody's in control. When we did get a bullish bar, it was a massive wick to the upside, 80% of the candle. They didn't win. Yeah, they are not winning. These guys, when, do you know what, we're selling today, and all of a sudden it collapsed down. We've got the biggest bar of the day come in, which closes below the last 1, 2, 3, 4, 5 candles. I'm a bear. So if I'm a bear, where are we not going? Above there. You pick how you get in, but that tells you what to do. And this is all in the reading price action course in the academy, isn't it? How to read price action. Inside bars and outside bars are indecision. Indecision bars are ignored. Yeah, because nobody is in control. We want to get in with who's in control of the market. If the bulls are in control, the bulls are in control, and we got 3 inside bars or outside bars, it means that the bulls have lost control. Because if the bulls were in control, we'd be going up. So there's a probability that we might go back down again. If we're going to go back down again, where are we going? Have you got a target? Yes, then go for it. If you haven't got a target, difficult. Because if you haven't got a target, they haven't got a target. And if they haven't got a target, they're probably not going to want to go and try that level, because it's price discovery and it usually fails. Breakouts fail the majority of the time, but when they work, they make an awful lot of money. So go with the flow. In the moving averages. So this one is always in short look now on the DAX. So we're always in short because we've got 3 bearish candles in a row. It's a bit late in the day, obviously. You had an always in long trigger there probably, and you had an always in short trigger there. So these 3 candles here would have done the same thing. They would have triggered an all in short mode, which is 3 bearish candles in a row. That would tell you that you wait for a pullback to short it. And that's exactly what happened. Where did it go? Down to here. And then it bounced for no reason whatsoever, really, at this point. It's just one of those things. It just bounced. Nothing you can do about it. There's no way you could have predicted that bounce. There was nothing to say, I'm going to bounce here. It just did. Some news maybe came out or something. Market maker just stepped in and went, got a load of orders. Someone bought a ton of Mercedes stock. Who knows? We don't care. Doesn't matter, does it? There's nothing we can do about it. It's just happened. So there you go. Anyway, so everything's melting down today, which is nice. I'll leave it there. I'll put this in the MSD Academy under the reading price action part. This and the indicator, I will be able to get out in the marketplace if you want it. It's not a particularly complicated indicator, so but it is useful if you want to do Al Brooks's stuff, and everybody needs to find their own way, and Al Brooks's stuff is very good. So it's worth reading. 3 books. There's a lot of reading. You're going to need to read them twice as well. If you like me, watch videos. I just absorb videos better than I do books. But anyway, so I'll let you go, and we'll pick this up again maybe on Monday. If you've got any questions and you're watching on replay, hit the ask a question button. Obviously, you can put it in the MSD Academy's questions part as well. And then we'll have a look at it again next week. Right. All have a good weekend. And I will be back Monday. So Monday morning is the member stream at 8 o'clock. Sorry, at 8 o'clock. So we'll do an analysis of the week. We've got a massive week for news next week. So we'll be doing an analysis of next week. We've got CPIs, interest rates, non-farm payroll, chaos. So there'll be a hell of a lot of news trading opportunities to diary in. There's going to be quite a few of those. So we'll do that on Monday. And obviously we'll just have a look at the position trader account and see how we're going. And I'll try and get as much of that flat as I can. And then next Friday, I think we'll probably have the last session before Christmas. So, all right. So have a good weekend. And I will see you guys next time.